Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 31st of October, 2025. I'm Mark Gardner. Basically, we had stocks broadly off overnight, although after the bell, we had Apple come out with a mediocre report, but rallied. But Amazon absolutely soared on cloud demand, up 14% in the aftermarket as we speak. As you can see here, S&P was down 1, NASDAQ was down 1.5, the Dow was down 0.2. We had another disappointing session for the Aussie, but broadly, it was fairly negative. You can see the technicals starting to flip a little bit as well. The hourly and the daily for the Aussie now is a strong sell. We've got strong sells starting to creep in and sells starting to creep in for the hourlies in the US. The Russell particularly is neutral now on a daily. We just keep getting these one-off. Amazon will probably save the market here now, and the Google result yesterday. But I don't think we can look past the fact that Meta and Microsoft were pretty disappointing results and were treated as such. So Microsoft was down 3.5. Broadcom and AMD were down at least 3. Nvidia was only down 2.37, but it was up 4% yesterday on the back of essentially on the back of that they were going to discuss Blackwell chips, Z and Trump at the meeting, and it wasn't discussed. So, and we're having it. That's a bit of a habit from this market lately. Is we rally on the good news, and then more often than not, and probably about a 90% rate, that good news doesn't unfold. And then, but it just stays there, essentially. So we're starting to see. I think Oracle got hit 6%. I think the gig's up for Oracle. I think that massive rally that it had, a couple of months ago, people are starting to realise that, with a debt to equity ratio of 500%, maybe things aren't all that good, and cloud may not save it. Meta was down 12. Tesla was down 4. I think one of the pension funds out of California is looking at blocking Elon's pay deal. I think the 6th of November is when we're going to get a result there at the AGM. But I think they'd be mad to knock that back overall. Eli Lilly did rally on the back of positive results. I think particularly on Zepbound weight loss treatment, strong demand. So next week, we've got the calendar here. We've got Palantir on the Monday. AMD is probably Tuesday, will probably be really closely watched. Spotify as well is on the Tuesday. They're doing that deal with Netflix and things like that. That's going to increase their reach, but whether that won't be in the earnings necessarily. ARM Holdings on Wednesday, another big chip stock that hasn't really rallied as yet. I think that it is very high, like it is super high valuation at the moment. But I've got to say that it's one of the only chip stocks that hasn't had that ridiculous, well, not ridiculous, but one of those ridiculous moves in terms of a jump of 25, 30, 40% on a day like the likes of many of these memory chip and chip maker and GPU makers have done. So Qualcomm as well on the Wednesday, and some just AstraZeneca on the Thursday, and just some more broader names towards the end of the week. Airbnb, Berkshire Hathaway. I don't know what Berkshire Hathaway is going to say, but necessarily they're sitting on about 40% cash. So that's possibly going to be the most boring earnings update in history. Apple Q4 income statement here. I don't know what the positivity is about broadly. iPhone's up 6% year on year on revenue. All of their other Apple Watch, AirPods, iPad, Mac, all flat. So no growth at all for a company that's actually grown. The share price has grown. Revenue is up 8% year on year. Sales in China are horrible. Basically, what the positivity was their services part was up 15% year on year. But if you're not selling iPhones and you're not selling your products, no one's going to use the services. So I think they're probably skipping ahead a little bit there. There's probably just a price hike somewhere in the Apple ecosystem. And look, no improvement in operating profits. Net profit improved by 11 percentage points, but it's a 27% margin. But as anyone who listens to the morning call, that I'm not a massive fan of Apple anyway. But yeah, given where the share price has risen to this year, against these metrics, this is, in my mind, is a horrible result. Amazon, this is just an absolute bumper. AWS up 20% year on year. The CEO came out in the earnings call basically saying that he expects at least 20% or plus. It was the best AWS growth rate since 2022, I believe, from memory. But again, this is similar to what the Google results were. They've had improvements across the board. So online stores up 10%, physical stores up 7%. Third-party seller services up 12%, advertising up 25%, subscriptions up 11%, and then AWS. And you look at the operating profit, $17.5 billion in profit and 11.5. So your sector that's growing at the fastest rate is 11.5 of that. Amazon, AWS in terms of Amazon is essentially double what the rest of the business is. But the whole business is growing well. Whereas you go back going back to look at this, you look at that Amazon result, you look at the Google result against this Apple result. I can't, for the life of me, understand why you would ever own Apple stock. It's just not. It just doesn't even. It's just an aging dinosaur. Because these results, I know which company I'd much rather own. You've got growth across all metrics and multiple revenue streams. And literally, you've got Apple pretty much hinging is the toothpick holding up the entire structure. So, as long as this AWS continues to go, and I did say yesterday with Microsoft's results that it was highly likely that AWS might cut their lunch a little bit. We have seen this happen back and forth and over many earnings seasons. So I'm not surprised. But yeah, up 14% I think, at around about half an hour ago. Absolutely outstanding result overall. So I would expect that will help salvage this sort of negativity that's been that's happened over the last 24 hours. Whether it's enough to keep this market to hang in here is another matter. You've essentially had two decent results from Google and Amazon, and the rest of them have been broadly ordinary. And particularly some of the heat starting to come out of those chip stocks. Trump walked out of that meeting going, essentially saying that it was a great and amazing meeting. All Z said was it's important for the US and China to have a relationship. We really are just back to, well, we're no better off than what we were in March, essentially. Well, we're worse off. He is going to reduce tariffs. We've tacoed out of another one of these deadlines, obviously at the last minute, as per usual. But US government, as of Monday, will hit the 34-day mark, which will equal the record, I believe, or the longest shutdown of the US government ever. I think we've had 13 bills go to the floor now and all get knocked back. I believe that last shutdown of 34 days costs the US economy about 11 or 12 billion. Even inflation adjusted, you're probably looking at this costing the economy maybe 20 billion. Loads more job losses as well. I think basically you have had a very large section of the economy, and I think government jobs is actually at fairly historical highs as well. So massive section of the consumer just not getting paid, and now not be getting paid for over a month. Auto delinquencies have actually and repossessions have peaked. Credit card defaults have peaked to new record highs. So the consumer's hurting really badly, and I don't think this is going to help. So very concerned. But when and if we get this, get the Bureau of Labour and Statistics back, to be honest, I can't see the employment or the consumer numbers being any good. So yeah, and at the end of the day, your end users have got to start, and your consumers have got to be spending money. And one thing that has been a very broad theme across this AI theme is investors are very concerned at the haphazard and extreme nature of the infrastructure spend from these large companies. Microsoft was a little bit criticised for it, but even the companies that have had the positive results, they've essentially gone and questioned, how much they're spending, because they're spending it with each other, but no one is actually making any money outside of that circle. So, but when there's concentration risk like this with those major stocks, it doesn't, if they're spending money with each other, it affects them, particularly in their own little bubble. But I really can't see, we had a reasonable result from ServiceNow. It was up 4%. Sales, it'd be interesting to see Salesforce in about a month. They're really the ones that are actually delivering to the consumer. But there's, I think, the likes of OpenAI looking at IPOing at $1 trillion in 2027. That's a red flag with a flashing red light on it, to me. And congrats to Sam Altman for turning a open source project into $1 trillion. Well done. So gold was up 2%, silver was up 3%, copper drifted off overnight, but has had a really strong run. Platinum was up 1.6. So I think those precious metals seem to have stabilised a little bit. Iron ore took a bit of a breather, but still up 2.5 for the week. Lithium, well, it is up 2.5, but it's, and up 2.5 for the week. Uranium had its first breather, but absolutely gangbusters for uranium this week, up 13.5%. Bitcoin drifted off, kind of doing its own thing at the moment, Bitcoin. But that rally in gold and silver particularly is quite a good bounce, given that the US dollar and the dollar index was up about 0.3%. Speaking of physical gold, silver, etc. Bulls versus Bears, our weekly podcast, which will be recorded this afternoon with Jonathan Takadina and I. We went and did a special physical gold edition yesterday. It'll be up on YouTube in the next, in the next day or so, and just basically having a run through, how to buy physical, how it's vaulted, and all those frequently asked questions, and a few other topics as well. Really interesting. We did it at Jaggards, which is one of Australia's oldest gold and bullion dealers. And the CEO Hercules there was, we thank him very much for accommodating us, and it was a pretty good interview. So, and just a reminder, we've got our AI and automation robotics investing webinar on Tuesday. Yes, I'm aware it's Melbourne Cup Day, but you will get it on demand. So if you register, you'll just get the video on demand. Immediately after the live webinar is finished, and you'll get a free ebook and a few stock suggestions both here and abroad. That really wraps it up. Sorry for the technical issues this morning. We had a bit of a computer meltdown, so apologies for the late nature of this. But everyone have a great day, have a great weekend, and we'll speak again Monday. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.